Here is a beginner-level corporate finance manager quiz that covers financial reporting and analysis, cash flow and liquidity management, and corporate governance and ethics. Let's go. Question 1. What is the primary purpose of financial reporting? A. To record employee salaries. B. To provide transparency about a company's financial performance. C. To increase marketing reach. And D. To reduce tax obligations. Answer: to provide transparency about a company's financial performance. Question 2. The 3 key financial statements used in financial reporting are A. Balance sheet, income statement, cash flow statement. B. Profit analysis, marketing report, cash flow statement. C. Sales report, inventory report, tax report. And D. Financial budget, forecast report, compliance report. Answer: balance sheet, income statement, cash flow statement. Question 3. The income statement shows A. The total number of employees. B. The total cash held by a company. C. A company's profit or loss over a period. And D. The details of outstanding loans. Answer: a company's profit or loss over a period. Question 4. The balance sheet represents A. The taxes paid by the company. B. The revenue generated in a given year. C. The number of products sold. And D. The financial position of a company at a specific point in time. Answer: the financial position of a company at a specific point in time. Question 5. What does the cash flow statement show? A. The movement of cash in and out of the business. B. The company's overall marketing expenses. C. The number of employees hired. And D. The company's credit rating. Answer: the movement of cash in and out of the business. Question 6. Which financial ratio is used to assess a company's profitability? A. Inventory turnover. B. Gross profit margin. C. Debt to equity ratio. And D. Days payable outstanding. Answer: gross profit margin. Question 7. A high accounts receivable turnover ratio indicates A. The company has excess inventory. B. The company has low sales. C. The company collects payments quickly from customers. And D. The company is over-leveraged. Answer: the company collects payments quickly from customers. Question 8. What is the main goal of cash flow management? A. To increase tax liabilities. B. To maximize debt financing. C. To avoid financial reporting. And D. To ensure a company has enough cash to meet short-term obligations. Answer: to ensure a company has enough cash to meet short-term obligations. Question 9. A company experiences a cash flow deficit when A. Cash outflows exceed cash inflows. B. Revenue is higher than expenses. C. Inventory levels increase. And D. The company receives a tax refund. Answer: cash outflows exceed cash inflows. Question 10. Liquidity in corporate finance refers to A. The profitability of the company. B. The number of employees in the finance department. C. The ease with which a company can convert assets into cash. And D. The company's total assets. Answer: the ease with which a company can convert assets into cash. Congratulations on completing 10 questions. Let's move ahead. Question 11. A liquidity ratio commonly used in financial analysis is A. Return on investment, B. Net profit margin, C. Debt ratio, and D. Current ratio. Answer: current ratio. Question 12. Which strategy helps improve cash flow? A. Delaying vendor payments indefinitely. B. Reducing unnecessary expenses and optimizing collections. C. Ignoring customer payments. And D. Increasing long-term liabilities. Answer: reducing unnecessary expenses and optimizing collections. Question 13. A high quick ratio indicates that A. The company has strong liquidity and can meet short-term obligations. B. The company has excess debt. C. The company is unprofitable. And D. The company relies heavily on fixed assets. Answer: the company has strong liquidity and can meet short-term obligations. Question 14. Why is managing working capital important? A. It determines the tax rates applied. B. It helps in employee recruitment. C. It ensures the company can cover daily operational expenses. And D. It increases marketing budget. Answer: it ensures the company can cover daily operational expenses. Question 15. Corporate governance refers to A. The legal contracts between employees. B. The hiring process for financial analysts. C. The daily marketing strategy of a company. And D. The system of rules, practices, and processes by which a company is directed. Answer: the system of rules, practices, and processes by which a company is directed. Question 16. What is a key principle of corporate governance? A. Transparency and accountability. B. Maximizing marketing expenses. C. Reducing customer engagement. And D. Ignoring regulatory compliance. Answer: transparency and accountability. Question 17. Ethical financial decision-making ensures that A. The company ignores financial regulations. B. Employees are given unlimited bonuses. C. A company operates within legal and moral guidelines. And D. Profitability is prioritized over legal compliance. Answer: a company operates within legal and moral guidelines. Question 18. Which organization is responsible for regulating corporate governance practices in the United States? A. International Olympic Committee, IOC. B. World Trade Organization, WTO. C. Federal Aviation Administration, FAA. And D. Securities and Exchange Commission, SEC. Answer: Securities and Exchange Commission, SEC. Question 19. Insider trading is considered A. An illegal activity involving the use of non-public information for financial gain. B. A common business strategy. C. A recommended investment practice. And D. A legal way to increase corporate revenue. Answer: an illegal activity involving the use of non-public information for financial gain. Question 20. Which of the following helps in maintaining corporate ethics? A. Manipulating company earnings. B. Encouraging financial fraud. C. Establishing a clear code of conduct. And D. Avoiding transparency in financial reports. Answer: establishing a clear code of conduct. How many did you get right? Comment below and subscribe for more.